Welcome to the Northbound Wealth Podcast. All opinions expressed by Brent, his co-host, or his guests are solely his own opinions and do not reflect the opinions of Northbound Wealth Management LLC. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, or tax advice, or as a solicitation to offer or to buy any securities. Clients of Northbound Wealth Management LLC may maintain positions in the securities discussed in this podcast.
So the week of October 13th through basically the 17th, the S&P index rose 1.7% this past week as earnings season kicked off a largely positive note, and President Donald Trump said his proposed 100% additional tariffs on China are not sustainable. The S&P 500 ended Friday's session at 6,664.01 and is down 0.4% for the month, but up 13% for the year. U.S. stocks fell in the previous week as Trump said he was considering a massive increase in tariffs on Chinese products coming into the U.S. This Friday, stocks moved in the opposite direction as the U.S. president said that additional tariffs were not sustainable. The comments provided some relief at a time when tariffs worries have been weighing on investor sentiment, also giving the market a lift. Q3 earnings reports began coming in largely above analysts' mean estimates. JP Morgan Chase, Goldman Sachs, Wells Fargo, Johnson & Johnson were among the companies that released better than expected quarterly results last week. All of the S&P 500 sectors rose on a weekly basis. Communication services had the largest percentage increase, up 3.6%, followed by a 3.4% climb in real estate, a 2.1% rise in technology, and a 2% advance in consumer discretionary stocks. The slimmest gain was recorded in financials, which edged up 0.02%. Warner Brothers Discovery was among the best performers in the comms services sector, rising 6.4%, amid a New York Post report that Paramount Skydance CEO David Ellison could submit an official merger bid for Warner Brothers in the coming days. So we're monitoring that this week. So Warner Brothers Discovery is for sale. Ellison is engaging with Apollo Global Management to finance any bid, according to the report. And Prologis shares had the largest weekly percentage increase in the real estate sector last week, jumping 12%, as the company reported Q3 core funds from operating and revenue above analyst estimates and raised its 2025 guidance. Micron Technology was among the top performers in the technology sector. Shares rose 11% amid reports the company's planned $100 billion semiconductor mega fab in Onondaga County will be linked to a power substation following approval by New York State regulators of a new underground transmission line. In the financial sector, gainers were nearly canceled out by decliners. The upside was led by shares of American Express, which rose 9.6% as the payments company lifted the bottom end of its full-year outlook after third quarter results surpassed market estimates amid card member spending growth. Decliners in the financial sector included shares of Progressive, whose third quarter profit missed Wall Street's expectations as its combined ratio deteriorated a little bit. The insurance company stock fell 6% on the week. Many large cap companies were expected to release quarterly results this week, including Tesla, Netflix, which missed yesterday, but there's some nuance with that. I think Netflix is going to continue grinding higher and doing well. GE Aerospace, Coke, Philip Morris International, IBM, T-Mobile, Intel, Union Pacific, and Procter & Gamble. So we're going to be tracking all those notable companies for you. Economic data may be light if the U.S. government shutdown continues, which it seems to be continuing as Democrats are holding out and have rejected an opportunity to keep the government open or get the government back open 11 or 12 times. So it's crazy that this even happens. Why we even have to talk about it, I don't know. I wish people would get their you-know-what together. The shutdown has caused a delay in closely watched government data releases, including the September's jobs report. So, but we'll be following and tracking all of this stuff for you. If you have any questions, you can always reach out to Northbound Wealth Management, 317-399-1107. Stay tuned for the next segment. Today is October 22nd, Mortgage Rates Daily. I get mortgage news basically sent to my inbox every single day. Mortgage rates were perfectly unchanged today on average. With that, they remain in line with the lowest levels in more than a year and very close to the lowest levels in more than 3 years. Recent momentum has been moderate and favorable. In the absence of big economic reports that are on hold due to the shutdown, bonds have taken cues from other developments, like the new tariffs announced 2 weeks ago and the regional bank drama seen last week. These market movers would normally be operating in the background, perhaps not even meriting a discussion. But the dearth of data and the generally narrow range makes their effects even more noticeable. In thinking about the relatively uneven return to long-term lows, it's good to remember that momentum comes and goes when it comes to rates and the bond market that drives them. Sometimes a string of good luck is the only required catalyst for a token pullback. Bonds are showing some fatigue as 10-year yields have pushed just under 4%. It may take some more convincing in the form of data or other events to motivate additional improvement in rates, but mortgage rates remain steady at long-term lows, and that was issued out by Mortgage News Daily, Matthew Graham, about 45 minutes ago. So I wanted to put that out on the podcast. So if you're looking at refi-ing, take a look at interest rates, subscribe to Mortgage News Daily. I really like it. It's a free subscription, and you can check it out online. So there's a Substack out there called The Transcripts. If you want to check it out, I'd highly recommend it. What they do is they go through using artificial intelligence, pulling quotes from the latest earnings calls transcripts, which is hence the title of the Substack called Transcript. And I thought I read these from time to time, and I really wanted to see what they produced as far as the bank earnings. We've had a lot of earnings going on, so let's dive in. The U.S. economy is still humming. That's like the overall headline. The consumer remains resilient, although bifurcated by income. The relentless bull market is leading to some concerns over frothy valuations. Everyone expects that at some point there will be an AI shakeout with winners and losers. But for now, AI leaders see huge demand and limited supply. That was the pull from this week's transcript analysis and search, weekly quotes from earnings calls. So let's take a look at this. So Citigroup CEO Jane Fraser says, quote, "The U.S. continues to be a pace setter driven by consistent consumer spending as well as tech investments in AI and data centers. But overall, while growth is cooling somewhat, and we're keeping an eye on the labor market, America's economic engine is still indeed humming." Let's see. Wells Fargo CEO Charlie Scharf said, quote, "While some economic uncertainty remains, the U.S. economy has been resilient with the financial health of our clients and customers remains strong." And Jamie Dimon, the CEO of JP Morgan Chase, quote, "While there have been some signs of a softening, particularly in job growth, the U.S. economy generally remained resilient. However, there continues to be a heightened degree of uncertainty stemming from complex geopolitical conditions, tariffs, and trade uncertainty, elevated asset prices, and the risk of sticky inflation." The Federal Reserve Vice Chair, Philip Jefferson, so this even includes the government, looking broadly across the U.S. economy, I see that growth is moderated this year and the risks to both sides of our dual mandate have shifted. Again, JP Morgan, we're clearly in a bull market. Look, we're in a bull market. It's been clear. Asset prices are high, credit spreads are low. Consumer's still okay. The consumer has jobs. Remember, jobs are what usually starts to force people to cut back and change things, and consumers spend less and companies cut back. So far, so good, Jamie Dimon said. All right, so let's see here. Jerome Powell said, quote, "Although some important government data have been delayed due to the shutdown, we routinely review a wide variety of public and private sector data that have remained available. Based on that data that we do have, it's fair to say that the outlook for employment and inflation does not appear to have changed much since our September meeting 4 weeks ago." That's Jerome Powell, the Fed Reserve Chairman. Goldman Sachs CEO David Solomon said, "For corporates, it's clear from our conversations in boardrooms that after a period of heightened uncertainty and volatility earlier in the year, many of our clients have navigated and adapted to the current state of play. Though near-term policy considerations are still relevant, many CEOs have shifted their focus back to long-term and strategic decision-making, particularly amid a more supportive regulatory environment. Again, that's Goldman Sachs CEO David Solomon. As it relates to financials, capital market activity is booming. So, JP Morgan Chase CFO Jeremy Barnum said investment bank or IB fees were up 16% year on year, reflecting a pickup in activity across products, with particular strength in equity underwriting as the IPO market was active. Our pipeline remains robust, and the outlook, along with the market backdrop and client sentiment, continues to be upbeat. I think it was the busiest summer we've had in a long time in terms of announced M&A activity. Okay, so CFO Sharon Yeshaya of Morgan Stanley said investment banking activity has been meaningfully improved after several years of muted volumes. Capital markets reopened and supported underwriting issuance across both debt and equity products. Bank of America CEO Brian Moynihan, we've obviously seen a pickup in activity here in the third quarter for capital markets, obviously. We were happy to see that. When you look on the investment banking, $2 billion in fees coming in the quarter. Everybody expected it to be less than that, but it came. Let's see here. Jane Fraser, Citigroup again. We capitalized on this with investment banking fees up 17% with continued growth across all products. Citizens Financial Group, Bruce Van Saun said, a pickup in market activity drove our highest capital markets revenues fourth quarter of 2021 with pipelines remaining strong. So animal spirits are driving demand. CFO Jeremy Barnum of JP Morgan says on the demand side, I really think, not to overuse the phrase, but from the perspective of our franchise, this kind of moment of revived animal spirits, let's say, is driving demand. We're seeing very healthy deal flow. We're seeing acquisition finance come back. Obviously, we're very involved in a particularly large deal this quarter. David Solomon said, I quote, I think one of the things to fame is that we're in an environment at the moment where CEOs think that the opportunity to get things done strategically is now possible after being in a period of time where they felt it was not possible, and that turning them all to focus on strategics. I think that we're going to see a very constructive M&A environment through the end of the year into 2026. I expect 2026 to be a stronger M&A environment unless there's some macro disruption. Morgan Stanley chairman Ted Pick, generally speaking, the investment banking product category over the next couple of years should be generally up and to the right. All right, on valuations, I got a couple of those, like basically reiterating that it's valuations are a little bit higher. Loan growth is back on lending. Looks like Huntington Bank shares CFO Zachary Wasserman. Loan growth accelerated to 9.2% year over year, led by strength in commercial lending and significant contributions from our new initiatives. Citigroup CFO Mark Mason, I expect to see continued loan momentum, particularly on the branded card side, but also in the trade lending activity, which also showed very nicely this quarter. No signs of stress at the moment. A lot of the banks said the similar thing. BlackRock now manages $13.5 trillion in assets. So BlackRock CFO Martin Small, we finished the third quarter with record AUM, record units of trusts of 13.5 trillion. That's T with trillion. That's crazy. Over the last 12 months, clients entrusted BlackRock with nearly $640 billion of net new assets, powering 8% organic base fee growth. Crazy. That's BlackRock as in ticker symbol BLK. The consumer, 70% of consumers are concerned about personal finances. So it's interesting. You hear all of that, and then you get Constellation Brands saying we're doing a monthly study of all consumers, of those are specifically concerned about their personal finances. So we've got a consumer base that's pulling in a bit and they're not engaging. Constellation Brands sells like wine and beer and spirits and stuff, but they so I don't know what kind of market research they're doing, but think that's interesting. If people are cutting back on spending on alcoholic beverages, usually that type of spending is up during a recession. So I don't see it as a particularly bad thing that people are pulling back and watching their diet a bit. Okay, so middle and low income consumers are stretched. PepsiCo CEO SSA Ramon Laguarta. I think that when you look at low income households or middle income households, they are very stretched. Fixed cost of living are going up around the world. Yeah, okay. Um, and it's true. It's not true. I think we have the tale of two cities. One is that the upper class is just fine, and two, that the lower class is struggling more. So, who are the consumers of Pepsi products? The more of the middle to lower consumer. So you can see where the pressure's at, but I don't know if that's different this time. I think it's always been that way. Um, Consumers are trading down. McCormick, so the spice company, the chief operating officer, Brendan Foley, says customers or consumers, especially low to middle income households, are adapting to the economic environment by adjusting how they shop, making more frequent trips with fewer items per basket, choosing larger pack sizes to maximize value, and stretching meals across a number of occasions. In addition, they continue to cook at home more often and shop the perimeter for fresh foods to help lower overall meal costs. Boy, that's been going on since the pandemic, I think, Mr. Foley. So I don't think that's a change. I think they just pulled back even more, which is what you're probably seeing, given that they're not in the same situation as the upper middle class or upper class. Let's see, Helen of Troy, Assistant CFO Tracy Sherman, we're observing ongoing consumer trade down behavior as shoppers seek value and prioritize essential categories. Dollar Tree CEO Mike Creedon says higher income households are our fastest growing cohort, providing that our value resonates across all income brackets. Restaurant traffic is slowed, says Domino's Pizza CFO Sandeep Reddy. I think that what we did want to point out was that we've definitely been seeing a slowing across restaurant industry sales to start our fourth quarter, and that's just a factor that's out there. So it's an observation. Delta Airlines president Glenn William Howenstein said, well, certainly I think our exposure to higher household income cohort has enhanced our relative position versus carriers that are catering to a more stressed, lower to middle income environment. So we'll see as everybody else reports. I can only speak for Delta and the strength that we've seen and continuing to accelerate as we head into the fourth quarter. So that's interesting. Across the board, you can hear the theme. The lower to middle income consumer is struggling and the upper class is just fine. That's been going on for quite a while and definitely not helped by Jerome Powell raising interest rates. Not to, you know, throw huck cast shade on Jay Powell. He's done a okay job. We have seen differentiation in our consumer with the higher end and middle tier doing better and the lower end maybe a little more pressure. Macy's Executive Vice President Thomas Edwards said. So technology onto that one, AI is seeing massive usage growth. Back in 2023, OpenAI had 2 million developers and 100 million weekly ChatGPT users, processing about 300 million tokens per minute on its API. Today, 4 million developers have built with OpenAI, and more than 800 million people use ChatGPT every week. And the API processes over 6 billion tokens per minute. AI has gone from something people play with to something people build with every day, OpenAI CEO Sam Altman said. Alphabet CEO Sundar Pichai said AI overviews in search are now used by more than 2 billion users. And in July, we announced that we processed 980 trillion monthly tokens across our services. We are now processing over 1.3 quadrillion monthly tokens. That's 500 million tokens a second or 1.8 trillion tokens per hour. Okay. The demand for inference is far exceeding expectations. So Dell Technologies Vice Chair Products Jeffrey Clark said, quote, the data center where the rubber hits the road, where all of that spend shows up 2 years ago, we thought in the United States, the data centers require 245 trillion terawatt hours of power by 2028. That number is now nearly doubled at 450 trillion kilowatts per hour. What's driving this? It's inference. The demand for inference, long thinking, auto-regressive reasoning models is now requiring more computational intensity. At a minimum 100 times, 2 orders of magnitude greater than we thought less than a year ago, more than and while that shows up in the form of tokens, the measure of what a token's needs, computational capacity and capability to provide them. We thought as we modeled this that inference would drive by 2028 1 quadrillion. That's 15 zeros, 1 quadrillion tokens. Now it's 57 quadrillion, and I'm sure that we're wrong. And enterprises are adopting this at a credible level, and it's much beyond technology. So, if you don't think that AI is the future, you better start listening to this type of stuff. What the CEOs are actually saying about what's happening, and kind of understand where this is going to go and how it's going to permeate our economy, and there won't be an industry not touched by it. So, or household for that matter, around the world, frankly. So the scale of investment is unprecedented. So across the industry, the scale of investment in AI infrastructure is unprecedented. Publicly traded hyperscalers are projected to invest over $350 billion in AI data centers this year alone. To put this in historical perspective, the U.S. interstate highway system launched under President Eisenhower in our 1956 cost approximately $500 billion in inflation-adjusted dollars, which took 30 years to complete. The Apollo program cost roughly $150 billion to send humans to the moon and spanned more than a decade. Applied Digital CEO Wesley Cummins said. So, OpenAI is planning to build custom chips with Broadcom. Okay, so OpenAI co-founder and president Greg Brockman said our collaboration with Broadcom will power breakthroughs in AI and bring the technology's full potential closer to reality. By building our own chip, we can embed what we've learned from creating frontier models and products directly into the hardware, unlocking new levels of capability and intelligence. So Meta CEO Adam Mosseri, Meta's Instagram CEO Adam Mosseri said, what the internet did, among other things, was allow almost anyone to become a publisher by reducing the cost of distributing content to essentially zero. And what some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on things that we're already seeing, which is that there's more people producing more content and reaching more people, and there's a lot of good and bad that comes downstream. Interesting. So healthcare. So the healthcare cost inflation is significant. So Jamie Dimon actually addressed this in the transcript that it pulled from his conference call. And Erica, just to add to that, medical, we spent $3 billion or so in medical. That's speaking of JP Morgan for their own corporate companies. So think about that. That's going to be up 10% next year. Okay. And so when you look at some of these things, and we know that already, and maybe think it actually might be up another 10% in 2027 for a whole bunch of different reasons. So they're expecting a 10% inflation rate per year in healthcare costs. I don't know how that's sustainable. I don't know what we do to fix that, but it certainly seems like we need like some sort of restructuring in the healthcare space. All right, we're almost there. We've got industrials and transports, JB Hunt, overall demand trended. This is JB Hunt, Spencer Frazier, overall demand trended below normal seasonality for much of the quarter outside the seasonal lift we saw at quarter end. On the supply side, truckload capacity continued to exit the market, and the pace of exits is accelerating. But the soft demand environment is likely muting the market impact of capacity attrition. Outside of recent weeks, truckload spot rates remained under pressure in the quarter. CSX Corporation, which is rail, Executive Vice President Kevin Boone said customers face uncertainty and headwinds from shifting trade policies, weak global commodity prices, unsupportive interest rates, and a persistently soft trucking market. Okay, Rio Tinto. Global EV sales are up 27% year over year. Lithium demand remains strong, underpinned by 27% year over year increase in global electronic vehicle sales across the first 7 months of this year compared to 22% over the same period of 2024. Demand from stationary batteries remains solid and is providing additional upside. And Delta Airlines corporate travel spend is seeing healthy growth. So corporate sales trended positively throughout the quarter, up 8% over prior year with sequential improvement across all sectors. Domestic corporate sales grew double digits, including mid-teens growth in our coastal hubs. We see opportunities for further growth as corporate confidence rebuilds. I'm thinking he's assuming from COVID, reinforced by 90% of our most recent corporate survey response anticipating that their 2026 travel volumes will increase or remain steady year over year. President Glenn William Howenstein said. And then finally, this is our last one. CSX EV Executive Vice President Kevin Boone, quotes, energy demand is lifting coal. On the other hand, utility coal performed well over the quarter with tonnage up 22% year over year. Power demand remains supportive, helped by higher natural gas prices. So that's interesting. AI needs more power. The world needs more power and pretty much going to pay and try to get it no matter which way they can. But I want to thank the Substack, the transcript, weekly quotes from earnings calls. I really like this. They use AI to go out across and pull quotes from. And if you want to pay for like the paid subscription, you can. I don't, but you can. And you can get further transcripts from the transcripts of earnings calls from CEOs. I think it's pretty cool. You can also go out to the Quarter app. I love that app. The free version even is excellent. I mean, you just download the Quarter app and it'll give you all the data on the quarters and the earnings calls. You can listen to them. You can read through the transcripts. But this Substack is nice because it pulls a lot of the common things that everybody is saying and puts it into a one-page weekly email blast, which I like.
Whether you're just getting started as an investor or you're managing a multi-million-dollar portfolio, Northbound Wealth Management has the solution for you. It all starts with building the right financial plan. To speak with a financial planner today, visit northboundwealth.com. Don't forget to check us out on youtube.com at Northbound Wealth. And make sure to leave a rating and review on your favorite podcasting app. Thank you for listening.